Hey guys, hope you're doing well. As we come to the end of 2025, let's do a review of the real estate market. More specifically, the new launch market in the RCR. So this is how the flow of the video is going to be like. We're going to go through 2025 to review all the new launches, the PSF, the take-up rates, and what the demand says about the RCR. Then we're going to go to 2026 and go through the more exciting part where all the supplies of 2026 is going to come out. We're going to look through all of them and we're going to see how this new PSF benchmark is going to affect the RCR market. We're going to move on to the resale market, how the 2025 supplies, how the 2026 supplies affect the resale market in the RCR region. Then after that, we're going to end off with a conclusion of things to look out for to prepare you for 2026 itself. For those who are unsure of what and where RCR is, RCR stands for Rest or Central Region. They're usually the transition space between the CCR and the OCR. So they're located around the boundaries of the CCR, around the city fringe areas. Okay, so 2025 review, very exciting activities in the RCR market this year, having very good take-up rates, going above 80 to 90% sold. In first impressions, what does it say? The demand is very high, and not just because the take-up rate is so good, but because the take-up rate is so good, even when the average PSF is so high. Look at the image in this slide. You can see Penrith selling at 97% on the weekend launch, average PSF 2800. Then look at Zion Grand, 84% sold in the weekend launch, average PSF 3050. Then look at Ori, 86% sold in the weekend launch, average PSF 2704. Then you have Linden Woods, 94.5% sold. That is extremely high, average PSF 2450. So with this project, they've already set the new benchmarks in the RCR market within that area. So if we were to go back into time, we can actually see how much it has increased. So in the next slide, you can see first at Penrith, there used to be Sterling Residence in 2018, average PSF 1800 PSF. Then we have Revere. I hope I'm pronouncing that right. But in 2019, the average PSF was 2580. Then for Ori in 2016, there was Gem Residences, average PSF 1426 during the launch. So you can see how quickly the value of this location appreciates. Look at the difference in the PSF. If you already know back then that you wanted to live here, but you hesitated and waited for the next launch, you'll be paying significantly a lot more. So just a food for thought for all of you out there who are ready to buy, you really have the means to buy, but you're just nitpicking and you're thinking that you can buy in the next launch. Consider wisely because you might be paying a lot more. Okay, so in this next slide, I've compiled all the new launches in 2025 together with the average PSF, the total unit, and the take-up rates during the launch date. But I believe that some of the projects, more units have already been sold, so the take-up rate is increased. So just take note that these take-up rates that you see here are during the launch date. However, if you'd like to see which units are left for each project, so you can WhatsApp me at 93690713. And I'll be happy to do the full analysis of the project and the stack analysis to help you decide which unit to get. So if you look at all these projects and you notice that PSF, majority of them are very high. So if you add this all together, the average PSF for all these projects combined is more than 2700 PSF, which is very high if you compare it to previous years. So you can really see how much the RCR market has appreciated in price. So now let's dive in deeper and see how much is the take-up rate for all of the RCR new launch transactions this year. So the total new launch supply for this year adds up to 4,425, and the total transacted units for this new launch, particularly this year, is 3,270 as of 4th December 2025. And you can see the remaining units is 1,155 units. So in total for all the new launches for 2025 in RCR region is 73.8%, and that is extremely high. So to give you context, I've added in a table to show you I'll give you a measurement of what strong demand is. So as long as you're above the 70-80% mark, you're in a very strong demand area. That means that this year the RCR is doing very well, very hot. Everybody wants to get their hands in the RCR market. So that is what the market trend is saying. The demand is good. But let's compare that to the previous years. So I've done my research and collated my numbers. In 2024, it is also very hot at an 87% take-up rate. But this could be due to the limited supply in 2024. So for 2023 and 2022, the demand is high, but not as strong as 2024 and 2025. As you can see, the take-up rate is 59.6% and 65%. Another thing that you should take note is the average transacted price. So you can see throughout the years, there is always a jump in the average transacted prices. But do you realize that the jump from 2023 to 2024 is significantly bigger? I believe this has something to do with the limited supply in 2024. The developers actually know there's limited supply in 2024, but the demand is still good. So what do? They probably priced it higher. So when they priced it higher and the demand is still good, people are still buying because the demand outweighed the increased price of the property. So that's why the transaction prices increased. So the demand being so strong, despite the high prices, and you add in the fact that the local purchasing power is increasing, if you add all these factors together, it will inflate the prices of the market. And if this inflation gets out of hand, becomes too hot, what will happen? Possible cooling measures. Don't know. Could be implementing soon. What are your thoughts? Comment down below. Do you think there'll be a possible cooling measures implementing soon in 2026? Alright, so now in 2026, let's take a look at the supply. You have Media Circle Parcel A, which will be located at 1 North. This is considered Singapore's own Silicon Valley. So the developers want it at 1036 PSF PPR. The break-even is 2052 PSF. Estimated launch will be 2400 PSF. Estimated number of units will be 372 units. Next, we've got Dorset Road, near Farrer Park MRT. Developers want it at 1338 PSF PPR. The break-even will be 2460 PSF. Estimated launch will be 2900 PSF. So this GLS for Dorset is a bit interesting because the numbers of bidders are very high. You have total of 9 bidders. That means a lot of the developers wanted that plot of land. Meaning to say, the developers saw a lot of potential in that site, which I also agree because you're close to Farrer Park MRT, you got a City Square Mall located there, and actually you're very close to the city, you're right at the city fringe. But if you're a bit superstitious, then maybe it's not for you because there's Farrer Park Hospital there, and I'm pretty sure that once a condo is being built up, you can see Farrer Park Hospital. But if you're a doctor or nurse, then maybe this project is for you. Next, we have Telok Blangah. Developers want it at 1326 PSF PPR. Break-even will be 2444 and estimated launch will be 2900 PSF with a total of 745 units. So this will be considered a bigger development and the location will be near Reflections at Keppel Bay. So I'm not sure whether the stigma of the location has passed out, but let's see what the developers have in store. And lastly, we have Thomson View. So this is a bit interesting because it's not really a GLS, it's more of an en-bloc sale of an existing condo. So the developers, UOL, paid 810 million for the site, but they had to top up the land betterment charge and also the resetting of the lease back to 99 years. So in total, the whole land bid was 1178 PSF PPR, and the break-even will be 2058 PSF. Where there will be 1,240 units. So this is a big development, it's a mega development. And for this project, I have a very strong feeling the developers will be putting in their profit margin high on this. So let me explain why. If you take a look at the map here, you'll see that the nearby condo, Jadescape, recent transaction was between 2,300 to 2,500 PSF. And to take note that this is a non-harmonized project and it's also 7 years older. So once you harmonize it and you reset the lease, it will be roughly around 2,600 to 2,700 PSF. And you add in the fact that Thomson View actually has more mass appeal, being closer to the MRT and also closer to Ai Tong Primary School, which I googled is actually regarded as one of the very strong top primary schools in Singapore. So I guess there'll be a very strong demand for parents or young couples or young families who wants to send their kids over to Ai Tong Primary School. They'll definitely be looking at this location. And also add in the fact that the developer who won for Thomson View also won for Dorset Road. So with that said, UOL has actually monopolized the RCR supply in 2026. Just let me put this into perspective. So as of now, there are 4 GLS in the RCR. UOL has won 2 of it. And not only did they win 2, they won Thomson View, the bigger development. So if you add all those units together, Thomson View and also Dorset Road, it makes up to 60% of the RCR supply for 2026. So I have a feeling that the developers could be leveraging on that to increase the profit margin for Dorset Road and also Thomson View. So just for additional information, these are the GRS that will probably be awarded in 2026. So these will most likely be the 2027 supply. So usually the developers, they take around 1 year, 1.5 years to prepare before the launch to settle all the paperwork, the legal works and whatnot. So these are 2027 supply. So for the overview of 2026, you can see 4 GRS at the moment, total of 2,740 units. Now let's see how that affects the RCR market in 2026. So now let's have a prediction of what the 2026 market will be like for the new launch. So you take all the 2026 supply and you minus off the average transaction volume per year in the RCR. So that would be 2,740 minus 2,189, and that will give you 551 units left with a take-up rate of 79%. And if you refer back to the table, anything more than 70% and above is extremely strong demand. So with 551 units left, what this means is that RCR is very low in inventory and the supply is not sufficient. So when the buyers cannot find the ideal unit that they want to buy in the new launch, where do you think they look at? Probably the leftovers from 2025 or the resale market. So then if you're the developer or the owner and you know the demand is strong and people are looking in the resale market and now the leftovers of 2025, what do you think they will do? They probably leverage this demand by increasing the property prices. So for those of you who are very persistent in staying in the RCR, you don't want to stay in the OCR, you don't want to stay in the CCR, now might be the good chance to reconsider looking through all the existing units that are left. Even though if those units have increased in price from the launch date, it might still be worth exploring. So with everything that we have just discussed and analyzed, let's try to use this to make a prediction as to what will happen in the RCR market in 2026. First, there will be limited supply, with only 4 GLS located in the RCR region. So with this limited supply, the units in RCR will be scarce. When things are scarce, there is strong demand. And remember when we did the exercise, we only took the average transacted volume throughout the 5 years. If you look at this year, 2025, the number of transacted volumes are way higher. And I suspect in 2026, it will follow suit. So regardless, it's going to be a strong demand. Because of the limited supply that they have provided in 2026, it's really not sufficient to fit the strong demand. And with this strong demands, what do you think the developers are going to do? They're probably going to increase the PSF and the quantum. And when they increase the PSF, they're going to set new benchmark. And when they set new benchmarks, who did they impact? They're going to impact the resale market. Because now the resale owners are looking at the prices around the areas, they're going way higher than what they are offering. So naturally, they're going to increase their prices too. And when the resale owners and developers keep increasing the RCR prices, what will happen? The gap between the RCR and CCR will become smaller. And when this gap becomes smaller, what does it allow? It allows for social advancement, meaning to say people from the RCR now can upgrade to the CCR by paying a bit more. Then this could actually bring back the demand to the CCR area. And it actually could be a government's approach to bring back more demand in CCR. Okay, now let's spend a few more minutes to see how this RCR resale market will be impacted. Okay, but before we dive into the impact of the RCR resale market, you need to know that actually some indicators that actually sets a new benchmark in the real estate market. So if you can look in these slides, in broad sense, there are actually 3. Just need to remember GTA. These are the main 3 indicators that affect the benchmark. So what does it stand for? G stands for GLS, T stands for transportation transformation, A stands for appeal. So essentially, it means that as long as there's a future GLS, transportation, or any appeal that's popular to the masses, the value of the location will tend to go up. I'll briefly run through each of the indicators. GLS is all the future plots of the land that the developers buy from the government to construct a new development. Often this will increase the price because the land is bid high. And when the land is bid high, the launch PSF and launch quantum will be higher too. This gives the existing neighboring project an opportunity to revalue itself. For transportation, these are your transport nodes, so your MRT stations, your LRT, your new bus interchange, such as your Thomson East Coast Line, your Cross Island Line. These are definitely indicators because it creates convenience, and convenience drives up demand. Next is appeal of the location, meaning is there any shopping malls, popular schools, business nodes nearby that make the location popular, essentially make it ideal for people who want to live there. So in general, these are the 3 indicators of whether the location will appreciate up in value. However, let's go even deeper. Let's be more detailed. What if I tell you there are ways to determine how much they appreciate and when you can enter into the maximum appreciation stage? And it happens in 3 phases: ACC, announcement phase, construction phase, and completion phase. It's quite self-explanatory, right? So announcement phase is when the public gets informed of the possible new launch of the GLS, or like the new transportation, or a new shopping mall, or even a new school. Construction phase is when the project starts to move. You physically see the works happening. You start to see the construction of the shopping mall, the MRT, or even the new project GLS launch there. So for completion is when the project is done and is integrated with the community of the location and is ready for the public to use. So let's go through some examples. Let's start off with GRS, and what are the ACCs? So let's take some examples. We'll be using Jadescape and Skyview because they're in close proximities, and Skyview was the last project before Jadescape was announced that had the similar characteristics such as the existing MRT before it was built. So in this slide, you can start to see how the ACC phases start to kick in. When Jadescape was announced in 2018, launching at 10 to 15% higher than the existing market trend there, Skyview owners immediately saw this and refused to sell cheap. So they fixed their selling PSF slightly below Jadescape's at around maybe 1550 to 1600 PSF. Then during construction stage, for those units that were not sold out yet, the developers decided to increase the PSF to 1800 plus PSF. So naturally when the prices go up, sometimes it might be above buyer's budget. So when it's above buyer's budget, they start to look around the area as to what was the alternative option for them. So naturally they look at the closest resale option. So if this trend continues, the Skyview owners will start to realize the demand that is spilling out from Jadescape. Then they'll start to increase their PSF also. So in 2023, Jadescape TOP'd, and this allowed owners to sell the brand new units to buyers who want a new unit without the wait, increasing the PSF to 2300 plus PSF due to the demand. So this made Jadescape a premium buy. So buyers who want to live in the location but their budget is a bit tighter, what do? They turn to resale option, which at the time was Skyview. So the owners of Skyview, what do? They increase the PSF also, but of course not to the level of Jadescape. So to the buyers with the tighter budget, it made sense because Skyview was still modern looking, had good modern design, has same amenities as Jadescape, and it's cheaper. So to them, it was a good deal. So that's why you can see in this slide, the transacted prices start to grow from 2018 onwards. Before that, take a look at this. 2016, 2017, the appreciation was minimal. When the announcement started in 2018, you can see how the prices start to pick up. Then it picked up even further when the construction started in 2020. Then after that, it picked up even more after the completion phase. And that led to some owners making $1 million, $1.2 million even. So now let's move on to the transportation transformation. And for this case, we'll be using the gardens at Bishan for a case study. So in this slide, you can see how the ACC phase kicked in for the transportation transformation, confirming that the station will be built literally at the doorstep of gardens at Bishan. At the time of announcement, the units were trading around the 900 to 1000 PSF area. So you need to understand that Bright Hill is a massive interchange station. So the construction works was very heavy, very noisy, very dusty for years, and the traffic deviation there was quite crazy. So when the construction began, the appreciation rate was actually slowly increasing. It did not appreciate too fast, but it didn't stagnate or decrease. So this is due to the construction mess, like the traffic dust and the debris that I was mentioning earlier. But there were some investors which had a mindset that if I can buy this unit and tolerate the dust and go in at a cheaper PSF now compared to later, then the payout might be worth it. So that's why there's still some appreciation in the project itself. Then comes the completion stage, where the residents could go to Orchard in 20 minutes and sheltered all the way. So this really boosted up the prices at the gardens at Bishan. So now in 2025, despite its remaining lease of 71 years, the project is still appreciating in value. And it may even increase in value due to the Cross Island line, which will be completing in 2030. By then, the gardens at Bishan will have 66 remaining lease. So what do you think? Will it still appreciate or depreciate because of the lease decay? Let me know in the comments below. So look at this timeline. You can see from 2002 to 2012, the appreciation rate was 18%, still going up. But the announcement to construction, that's when you see the momentum of the appreciation kicking in, where the appreciation rate went up to 30%. But from construction to completion, the appreciation rate dropped to 26%. Why? Because the construction started and people could actually feel the inconvenience happening. So that led to the decreased rate of the appreciation. But after the completion, station is operational, the appreciation shot up to 39%. And that's why if you take a look at the profits, you can see that many of the owners has made up to 1.5 million. There's even 2.4 million. One of the owners made 2.4 million in profit. And look at the annualized gains. Many are above 5%, and the average is actually 3 to 4% in the resale market. And then as you can see, even those who bought in 2016 in the construction phase still had a 4.4% annual gain, profiting at $360,000. So now let's move on to appeal. we'll be using Sunglade as a case study. So the appeal is the shopping mall next. Before that, Sunglade was like the good condo but in a very ulu location. Nothing there, no amenities. But as time goes by, there was an announcement that there will be a shopping mall right beside Sunglade. So if you can see through the timeline, the announcement and the construction time gap for next mall was actually very short. The announcement was made in March and then the construction started in November in the same year. So that didn't really give the market time to react. So that's why you can see that the appreciation here is very minimal. But after the construction phase, you can start to see the appreciation picking up, where you can see it decreased to 1100 PSF. That's 29% increase rate. So eventually after the completion phase, some of the owners decided to cash out and sell off the location. Many of them saw profits up to 1.5 million. So you look through the profit column, majority of them cashed out with a profit of 1 million and above, where many had annualized gains of above 5%. So now you know the framework, you can start to do your own evaluation on projects and ask yourself, what are the benchmark indicators that I can spot using this framework to invest in a good property at a good entry price point. So regardless whether you are a seller or a buyer, this framework can help you, give you an idea, a clearer idea of when to buy or when to sell. Because if you are a buyer, you need to see, okay, I will buy between the construction and maybe completion phase, because that's when some owners, they cannot tahan the construction. For me, I don't mind. So I'll lock in the purchase price at the time before it appreciates even more. So if you're a seller, maybe you need to tell yourself, I don't mind the noise if I know I can sell at a much higher price later in the future, during or after the completion phase. So you can judge for yourself between the trade-off. Why do I want to have a bigger capital gain but I have to suffer the inconvenience, or am I happy with the capital gains that this project already give me and I don't mind leaving to a different location that is more convenience or doesn't have this inconvenience. So this framework helps you to align it to your intention of whether you want to buy or whether you want to sell. So this is the same framework that I use for my clients, whether they're a seller or buyer. When do they want to enter? What are the trade-offs that they're willing to let go? And if you wish to have a tailored one-to-one consultation report using this framework, you can contact me or WhatsApp me at 93690713. So next, moving on, apply this GTA framework together with the 2025 new launch review and the 2026 analysis, the demand and supply. You can somewhat forecast how the developers and the resale owners will be pricing their property. So you have a clearer idea what is a fair and good property entry price. And just a heads up, there'll be a lot of condos that are going to TOP in 2026, meaning to say they're at the completion phase. And with the RCR supply in 2026 being so limited, I won't be surprised if the property prices would be inflated upwards. It's only a matter of when, not if. And then for those new launches that were launched in 2025, in 2026 is going to be their construction stage. So this could mean a resale re-evaluation around the surrounding new launches. So again, to all the investors and own state buyers, you can use this GTA framework to help you invest in the right time and right property, which is very crucial because I've seen many buyers end up with property that doesn't even appreciate, or even worse, helps them lose money just because they had the idea or know of the idea that the RCR market is appreciating. They didn't do their full depth analysis and randomly chose a condo that just felt right to them at that point of time. So all those condos that tick their boxes, like the space, the amenities, those are good, but they didn't do a full depth analysis at which stage that they had to enter in, whether the entry price was good. So when they entered into the entry price, it was bad. So the appreciation was very low, or worse, it stagnated or lost money for them. So that's why it's very crucial to have a framework that works for you. Okay guys, I hope this video was useful. I hope you guys enjoyed the video. If you have any comments or any questions, you can leave them down below at the comment section. And also, like and subscribe.